Since 92, approximately 20 odd years of defined contribution means that Australia now has about 2.7 trillion of pension savings, and it's fourth highest pension schemes in the world. Fiscal stimulus is something that Australia has benefited in the past, but also likely to benefit in the future.
In infrastructure is a great example where the corporate bond sector, I think, is going to perform very well. Infrastructure have very utility-like cash flows, so things like toll roads, airports, power stations, utilities, those sort of products are very strong for a credit investor because they have regulated returns, utility-like cash flows, and with interest rates currently where they are quite low, these companies are not going to have problems in terms of refinance risk or interest sensitivity issues. So Australia's bond market offers a few advantages. The first point is it offers a very attractive spread per unit of duration compared to offshore markets like Europe and US. This is quite good because when interest rate risk or duration pokes its head out, then you're not impacted from a performance point of view. So Australia is a relatively lower duration market than Europe and US. Another advantage in Australia is the attractive credit quality. This means that you're less likely to see big defaults in Australia as you would see in Europe and US. The third point or advantage is that Australia has a very stable economy, fairly stable government, and has also had 28 years of ongoing economic growth. So from a credit fundamental point of view, investing in the Australian bond market is quite favourable.
A diverse economy, and one policy that we can refer to is in the early 90s, the government has been focusing on increasing competition in the market by privatising the government entities but also corporatising them as well. Australia is quite aware of the impending risk, corporatising them as well. So structuring your portfolio appropriately is quite important.
And we think the revolution of green bonds is one thing which will become part of investment strategies going forward. So I think investors need to be flexible. They need to look at green bonds as part of their portfolios. Things like the rise of electric vehicle technology, plastics for other products. How are they reducing carbon through this bond? What sort of products are they using to enhance things like solar cells, electric vehicles? All this is going to be part of how a bond investor needs to manage ESG.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。